Hey everybody, and welcome back to FSP, Forex-Stock-Predictions. This is the Vortex Trader, and today we are looking at how to draw an order block. So, what is an order block? We are going to keep this video relatively short and to the point. Please remember to hit that like and subscribe button, and let's jump right into it. All right, an order block is a place on the chart, right, where price has a lot of orders in it, right? There is a lot of liquidity in this specific zone, and market makers will use this zone as points to send the price back into in order to collect a lot of those orders to carry on then moving the price in whichever direction it chooses, right? So in other words, let's think of it as a block of orders. So here we have a yellow block, here we have a yellow block. Within these blocks lie lots of buy orders or sell orders, right? Market makers know this. They then choose to push the price down back into the zone so they can collect the liquidity that they need in order to carry on pushing the price further, right? This is essentially what an order block is, and we can see them all over the charts. They exist across every single market, from crypto to forex, stocks and gold, oil, whatever you are trading. They also exist across every single time frame. So whether you are trading Bitcoin on the 1 minute or you are trading gold on the 4 hour, you will find these order blocks. Right. Now, order blocks exist within ranging markets and they exist within trending markets, right? How do we spot them? Well, when we see markets ranging, we like to look for certain zones where price is respecting a support line and a resistance line. Once we find a zone, we will take our little highlighter tool or our little parallel channel tool and we will literally highlight the area, right? So we can see it clearly and we can see where price is wicking to and bouncing off of, right? So we have our line of resistance and line of support. We will then wait for price to impulsively break this zone, right? Once it has broken it and closed above this zone, we will then wait for it to retrace back into the zone, right? This is when we would enter into our position and then we would go long, waiting for price to carry on moving upwards, right? This entire zone can be deemed an order block, right? Or another way to make it even a little bit easier to understand, we can look at the candles themselves, right? If we assume that we have a bullish candle, bearish candle, bullish candle, bearish, bullish, bearish, bullish, right? We can assume that there would be another bearish. Doesn't necessarily have to be that way, but we would be looking for the last most recent bearish candle before price decided to break this zone, right? Once we have identified the most recent bearish candle before price decided to impulsively break that zone, we would then highlight that bearish candle just like this, and we would wait for price to return back into this zone before carrying on its move upwards. This area can also be deemed an order block, right? Now the same applies for a trending market. With a trending market, we know that price moves up impulsively or down. For the sake of this example, we're looking at a bullish trending market, right? Price moves up impulsively, it then retraces and consolidates before it carries on moving upwards, right? We would then take the area or the zone where price is consolidating and we would highlight it. We would see where the candles are falling, right? We would make sure they respect the support and resistance lines, not even support lines, right? It could just be a resistance line that price breaks, right? We would then watch this price, make sure it breaks the resistance of the consolidation, right? Before waiting for it to come back in and collect more orders from that exact zone. Another way to make it simpler or smoother is wait for price to return back into the zone of the most previous bearish candle. So if we can assume that price came back down, started to consolidate, we can assume there would be a bearish candle somewhere in the mix here, right? The most recent bearish candle before the impulsive move starts upwards, where it breaks previous resistance, right, would be deemed or called an order block. And we would highlight this zone and we would wait for price to come back in and touch the zone before entering into a long position and waiting for price to carry on upwards. Now, this is not a golden goose strategy. There is no such thing as that, right? In order to find these order blocks, we have to do a lot of back testing, right? We have to decide how we're going to trade them. Are we going to trade the entire zones, or are we going to just trade the actual candles themselves, right? This all will be figured out when we do back testing, right? It's all different on various pairs or your favorite stocks, whatever you enjoy trading. But the strategy itself works the same way, right? So let's have a look at some live examples on the chart, which I have labeled up for you guys. We are on the Australian US dollar here on the 1 hour time frame. Now, let's have a look so we can see how these things apply on the actual price chart. We see here, price moves up impulsively, consolidates, comes back down just a little bit before carrying on moving up impulsively. Let me make this a bit bigger so it would be easier to see. Okay, what has price broken here and closed above? We can see to the left, if we move our eyes to the left, we have previous resistance, which is right here. Okay, we see price closed above it. So for the sake of this example, we highlighted the zone with the most recent previous bearish candle before the impulsive move upwards. We can see that price then came back in, collected more orders from the exact same zone before carrying on upwards, right? And if we were to trade this, putting our entry somewhere in the middle zone, in the yellow zone, somewhere in the middle there, we can have a stop loss of a few pips. This all depends on your back testing, by the way. There is no set rules, right? You have to back test and create a list of rules and criteria that apply for you. All right. And we can see that this would have given us nearly a 1 to 10. That is not out of the ordinary for order blocks. It really isn't, right? I myself like to get at least a minimum of 1 to 3, 1 to 4, 1 to 5, depending which pair or which stock or which instruments or assets I am trading. But these things do occur, right? They don't occur all the time. There are plenty of losses just as there are wins, right? It's about back testing and deciding which setup you want to take. Right, so that is one example. Let's carry on moving forward. Let's have a look here. Here's a nice one. We have a support line right here. We can see that the market, let me delete this, has started to trend downwards, making lower lows and lower highs, right? What do we have here? We can highlight the most previous bullish candle before we see a break of this support line. Yes, this is a significant support line. We can see that price did come down, bounce off it, right? We already have it marked up, right? And we are waiting for this area to break, right? Which it did. Price broke to the downside quite impulsively, nicely, closing below the support line. So we highlight the most recent bullish candle before the breakdown, or we can highlight the entire zone covering all these, the bullish candle, the bearish candle. We can see that price is respecting this point as a resistance line, as well as this point as a support line, right? And we would then wait for price to come back in to the yellow zone before carrying on further downwards, which we can see it did right here. All right, we can see that it collected more orders, as it is called an order block, and it carried out its journey south. Great. Let's see if we can find one or two more before we wrap this up. Here is another one. Right, we can see that price has been trending upwards from this bottom area right here. Right, we can then see Price breaks previous resistance impulsively. It did it in two candles, right? We highlight the most recent bearish candle before the break of previous resistance, which is here. Right, we then wait for price to come back in, touch this zone, and carry on upwards, which we can see it did right there. Wicked into the yellow zone before carrying on upwards. One more, let's see. We have resistance, previous resistance here. We have one tap, two tap. We extend the line because we know this price is respected as a resistance line. We are waiting for it to break, right? What do we see? We see price impulsively breaks, right? We then highlight the most recent bearish candle before the break or the entire area, right? Which is actually just respecting this support line. We have this wick up to the resistance, and we're waiting for the candle to break, which it did, waiting for it to pull back into this order block, which it did, before carrying on its journey upwards. All right, so how do we draw an order block? Just to summarize, we literally create a parallel channel just like this, and we will find areas of the charts that are respecting support and resistance, whether ranging or trending. We will then wait for a breakout, right? Once we see the breakout, we will highlight the most recent bearish candle or the entire zone, right? Within that zone are order blocks, and there are plenty. There are millions and millions and millions of order blocks that get filled all the time. There's a lot that don't. There are plenty that will stop hunt you out. But like I said, it's all about backtesting. Go back in time, go through these charts yourself, and figure out how you want to use these order blocks to your advantage. All right, everyone, that'll be it for the day. Hope you all have a fantastic day. Thank you for watching again. Please remember to like and subscribe, and I will be seeing you all on the next one. Bye.